Hello folks, I'm L.A. Little and this is your daily TA Wrap, where we take a look at these markets each night, doing it from a neoclassical perspective, and every time asking ourselves, what happened today and what does it tell us about tomorrow? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. And we had a beautiful day in the markets if you're a bull, because they did exactly what you wanted to see them do. We talked about what to watch for last night, and that's exactly what we got. Let's start there. And by starting there, what I mean is let's go to the IXIC, because last night we were talking about something that you could watch and use as your mechanism to know what was going to happen. The NDX, or not the NDX, but the NASDAQ composite, it was doing a retest and regen. It was coming back into this area, and as I said, it was probably going to be hard to hold it, but hold it did as it came back into the area. Right, it was hard to tell because the volumes looked pretty close today, but the volumes over here 20.2, you came back in it with 19.9. So you come in with slightly less volume. You get right to the bottom of the bar almost. 42.25 over here is 42.26. So almost to the bottom. Flips around, heads back up. And this thing's going to go back up and try to test the highs and get over it. That was the first clue that something was happening. But it wasn't the only clue, because we also talked about some others that could be watched. One was the SPX. Another one was the Russell. The Russell was trying to push lower, never even got lower today. 1148, 1148.66. Well, I take that back. I guess it got 5 cents lower. So slightly lower, and that actually is even more bullish when you look at it, because you undercut the low, right? You don't have the volume. Sellers not showing up as you even trying to get back into this area that you can't get back into, right? They don't show up. What do? You go back up. You're going to test this top again and try to break out. If it gets over this, folks, just like it was when it got over this, it's going to go for the next one, and the next one is the highs. So when you look at the Russell today, the fact that it couldn't trade down was a decent sign, just like with the NASDAQ. Now the NASDAQ was the best clue, but another decent clue was the SPX as the day got underway, and that is they started these things. Well, actually, they were down this morning. There was a bunch of economic news. They were down this morning. Then they popped up on the, well, they came back on the first set of news that hit about 30 minutes before the open, and then the second set of news 30 minutes after the open, they just took off. And if you look at this, again, less volume, you undercut it, you're actually coming back into this high as well. Right, if you measure those out, if you measure this big wide price spread bar, that's the one that's got all the volume on it. You come back in it, you don't have any volume. Right, that flips around. This thing's going to go right back up. It's going to try to get over and stay over this high, and it's going to test it again tomorrow. Now remember, we tested it 3 times and came down hard when we failed. Well, if you go back up here and you test it again once or twice and you still can't get over it, I suspect you're going to get another pullback. But it is going to go back and it's going to test it again. It's probably going to do it tomorrow. If it gets over it, it's going right to the highs, just like we talked about with the Russells. And there's not a lot of volume up there. I mean, it is 37. We're doing 34. So, you know, it can take out those highs. And note, there are 2. And also, you know, there's a lot of things to note here. You got 2 swing point highs. If you break over multiple swing points, which on this case, you know, it's only going to be on this time frame, because you don't have it on multiple time frames, because this market won't stay down, right? I mean, you go down, you come right back up, right? So if it breaks out, it will be over one time frame, multiple swing points though, and that can get you 2 to 3 bars stretch on this time frame. And if you look at this structure, right? If that was it, right, 2 to 3 bars, and it doesn't have to stop at 2 to 3, but you can expect 2 to 3 bars. That's a huge structure, folks. I mean, we're talking about, let's get the numbers on this. I haven't done the numbers, but they're big. The number is 1738 1840, almost 1848, right? So it's about 110 points, 107 points. And if that's the low, that's 1930 would be the target. I mean, these are not small numbers. Now, it doesn't, after this kind of a move, even if it breaks out right away, you got to expect it's going to stretch that 2 to 3 bars, come back, test, right, and then probably take off if that's the way it's going to work. But right now, this thing is setting up to go after those highs from yesterday, right? Try to break that area one more time. That was the breakdown bar. 1842 and a quarter is the number. If you get over it, it probably is going to, well, it's going to test the highs, probably going to break them, in which case you get the extension. Dow Jones, let's see what it did. I haven't really watched it that close. Nothing there really. I mean, the Dow Jones isn't doing anything. And we already talked about the others. I was flipping through the sectors because I haven't paid a lot of attention to them lately. And as I flip through the sectors right before coming on the air here, a lot of these are setting up retest regens. Some of them are setting up ABCD structures. I can point some of them out as we go here. So you kind of have, in this particular case, you actually had one here that finished, well, almost finished, didn't quite finish. And then you came back, and now it's a range trade. Now some people are going to count this as an ABCD structure, but I don't think that's really valid. So IYT really is a laggard right now, is not showing much. One of them that continues to stretch those, the semis. I mean, you had Apple down another percent today. Well, it wasn't a percent. It was down about $5 or $6 today. Yet the index, the NASDAQ, was up in rally mode. Well, thank the semis, because these guys won't stop, right? You pushed. Remember yesterday it was an over-under, but it was heavier volume. Well, you just go right back up and you make it even higher. So you close at the highs. Huge run already. They can go higher. There's nothing to stop them still. XLB. So that one's just over the highs and stretching higher. XLB. Some of these are just starting to try to set up ABCD structures. This one hasn't. This one is like the NASDAQ. I mean, the semiconductors just keep stretching every day. Going to go back up and test the highs. Now the XLE already had an ABCD structure in place. It was the juice this morning, and that one just about played out now. And it's just about done. That's right. You're up there testing the highs. You had volume yesterday. You'll test it again tomorrow. This ABCD structure is just about done. So it looks to me like what you're going to get is you're going to get a test here, probably a failure, and that one's going to, do some consolidation type stuff before it does anything else. That's well, every time I say this, those are the things that should happen, right? If it's stronger than that, then that's stronger, right? And that tells you something. Talk about something stronger. If you remember last week, we had multiple failures day after day after day, and this market wouldn't trade down, and that was telling us something, right? Here today, and I'll pop back over real quick. Here today, you had the first move down. You should have probably pulled back deeper. I mean, this isn't anything, right? You get a 0.5% or 0.75% down, and then what do? You almost take it all the way on the next bar, right? It's like a takeaway bar almost. This market doesn't want to come in. I don't care that it's made this big run. It just doesn't want to come in. And it looks to me like, if anything, it's going to do its best to just trade higher. I mean, that's what it's going to try to do, right? But even if it doesn't, it looks like the correction is going to be like this instead of this way, right? It's just going to work itself off up here and then eventually take off again, probably. And the longer it works across up here and doesn't give it up, right, the stronger that next move is going to be, because it's going to have time to work off this oversold condition. I mean, excuse me, overbought condition it's in. A lot of people love to watch those oscillators, and I'm sure the oscillators like right now are way up here at the top somewhere, right, where 80% is here. They got to be up here. right, given this move. And what will happen is they'll roll back over and then they'll be able to run again. And well, you can see that just looking at this thing, the same thing is happening. And you know, it's up into a good area. Supply and demand is where it's really at. This thing didn't have enough sellers to take it back lower. It's hanging up there. It's working off its overbought condition that way. Let's go back to the other ones though. So XLE looks like an ABCD structure, just about done. XLF actually just set up an ABCD structure. And that structure, well, I guess I ought to get the other one so I don't make my eyes crooked. Let's grab this other tool. So if we go straight up here, back down, right, this one undercuts, no volume, little hammer reversal. This one's going to try to set up its ABCD structure now to get higher. And if that in fact does take it up there, it's going to break the highs. Now what it has to deal with, what it has already dealt with was the retest regen off these lows, right, that it broke down under, and that's what turned it here. Volume expands, undercuts, nobody wants to sell it. If it can get back up into this area, folks, it's going to go back to the tops. So, you know, one could buy this little reversal here. It's a little bit more dangerous, so to speak, because you still got big bars you got to get over and so forth. But this does look like it's going to at least come back here and test again. And if it gets over it, right, then you got your ABCD structure to the upside. And a lot of that is going to be on how fast this market moves, you know, up or down. If it starts to move up, the financials have to go with it. It doesn't have a choice. Here we had volume. Now this one's kind of interesting. This one actually had volume underneath today, you know, underneath this cut. So, you know, this one can come back and test some more tomorrow. So if you take the three big, well, there's four, the four largest sectors in the S&P 500, they're financials. Financials are struggling. Technology is like kicking rear. Industrials, which look to want to come back, and energy, which also looks like it's about done. So from that perspective, it looks like the S&P probably will have a little difficulty making that run unless the financials really start to kick in. Talk about things that aren't kicking in or trying to kick in is the XLP. The XLU has been extremely strong. It's up here making new highs on the daily. And this has actually a breakout of multiple swing points. You can see it here. You don't see them on the left hand side. Those were all weekly swing points that got broke as well as dailies. Go back to the XLK. The XLK is up at the highs and breaking, or at least attempting to break out. That will try to break out tomorrow. XLV has been extremely strong. Not as big a sector in the S&Ps, but a decent one. That one also got some good juice today. And the one that had been the weakest one, well, not the weakest, but one of the weaker ones, is the consumer discretionary. It's up doing its retest regens. And so it's up here trying to retest and trying to regenerate lower. At this point, it's already gotten over this one. The one that's left is here. It's almost to the top of it. Folks, this market's just stronger than one thinks. And I don't know why it's stronger than one thinks, but it definitely is. And it keeps pushing. And it looks to me like it's just a matter of time the way this thing is trading. Okay, let's pop over to the ox markets real quick and look at the bonds, look at those guys. So let me get up here, grab that. And so we'll start with the dollar actually. So if I go to the UUP, so a dollar, nice big spike, but couldn't do anything. It's a doji, there's no volume, right? Dollar's going to come back down, looks like. Remember, it tested down here, didn't have the volume, reversed. The dollar is going to continue to do work down here. And that should be good for gold, should be good for the commodities in general. Let's go look at those right quick. Actually, let's pop into oil right quick to see what it looks like as we're here. Where did my oil go? There it is. So here's the oil market via the ETF. New highs, hanging at new highs. And on a weekly, it's a big, on the weekly, it's a big range trade, but it's over the swing point high and going after the next one. So, a weaker dollar helps all the commodities. Let's go back into silver. Now, I thought these yesterday would get some more selling, but they flipped around today and actually went right back the other way. So they're going to try to test the highs again. But folks, this to me looks like it's playing out up here. Let's see what gold looks like. If the dollar really does break to the downside, well, these will go higher. But right now it's struggling. The gold had decent volume though. The gold's going to test the highs again. They don't want to give that one up either, do they? I guess when they get all these markets running, they want to keep them all going. And let me see bonds. Where's bonds? Here we go. So bonds still trying to break down, but they still don't look like they have the volume to me. So 107.09, that was the high. What was the low? 105.88. And you get underneath it, back over it, don't have the volume. That again looks like bonds are going to try to flip around. So ox market's a little mixed in terms of what that's going to do to the equities, but the equities to me, at least look like they want to test again tomorrow. Given our rally today, I would expect Europe trades up again. I expect Asia trades up again. They tend to follow us, so I suspect they will. Let me see if you guys got any questions, and if not, MU. Federico wants to look at MU. So MU's Micron. It's a chip manufacturer. They've had a very strong chart. They still look strong. And so what's the question here? Can I take a look at it? Yeah, sure. Let's see what the weekly looks like. This has been on a tear. I mean, they had earnings, got a nice pop off earnings. It's a, for me, it's an interesting company because, like Amazon and some of the others, these guys hardly ever make money. Yet they're always in demand, it seems. 2367, 2450. Yeah. Well, it's hard to say buy any of these things. Of course, this isn't as stretched as you see the rest of the semis, and this really isn't quite quote-unquote a semi. Well, it's a chip, but it's a memory chip, right? Mostly is what they make. 2477 is where I'd still be trying to buy this little retrace into this area. That's the spot. So, you can see it's struggling to get higher, but it's building a nice base. You just try to catch it somewhere here. Actually the charts are pointing it out pretty good tonight. They've got it outlined pretty well for you here. I mean, that really is the first one, and this really is the second one. So if you can get something into that area, that gives you a pretty good probability that you're going to win on it. You take more down there, and you have your stops probably up underneath here is the way I would trade them, and I'd trade an intermediate term time frame on it. I think that's your best bet. Gives you a high probability to win. And this thing, if you think about it from a different perspective, how far can it go? Most of these you don't have left sides to the chart anymore, so you go and look at it from the other perspective, and that is the range. And this range is 23 to, let me see what that number is, 24.5 to 22.30. So it's roughly $2, and tack that on there at 26.5. So you can trade about another buck up from here. So you really want to try to get it somewhere in here, right? With a target of about 26.5. The other target looks like it's going to be about the same. Yeah, and that's the ABCD structure. And so you do it this way. Let me find out where it is. Right, looks like it's right there. Right, and I'm guessing that's going to give you about the same target. So we could quickly guesstimate the numbers. That's 22.65. It's going to be a little higher. 22, it's about, yeah, because it went sideways, it's going to be a little higher. So that's about $1.50. So somewhere between $1.50 is what you can expect. So you can use that as, you know, how you want to play it. If you take it up a little bit higher, take it here again, put your stops underneath, your risk is a little bit higher, but you know, you're guaranteed to get in that way, or more than likely going to get in. But again, you have to figure out how you want to play it. There's always multiple ways to look at these things and how you trade them. You know, if this market really doesn't come in, you know, in other words, you know, and I'm going to go back and I'll use actually the IXIC, because right now this is the market. If this really is the extent of the pullback, and this retest regenerate actually regenerates higher, right? One has to change their plan a little bit about how they're going to get into the market. I mean, hopefully you haven't sold out of the market and you're still long the market, because there was no reason to sell out. There was definitely reason to be more cautious, and we started doing that early this year, and there was reason to be, and it proved to be true. It's just that if you didn't catch this move early on this straight up move, you know, now you're kind of debating, okay, where do I actually put something on, or, you know, more on? And if that really is the extent of the pullback, you know, you're going to have to change your game as to how you play it. For example, you know, if I look at this and I think, okay, this has been the strongest index, and this thing, if it really starts breaking above here and starting to leg higher, you got to start playing breakouts, right? Because the breakouts are probably going to carry, right? If we look at the SPX, for example, and if you just wanted to play a broad index, if you know, in terms of how to judge these things, if this one starts to break higher, in other words, it starts to regenerate higher and it's not very far from those highs, and then if you walk over and look at the SPX and it starts to break over this high, where you're almost guaranteed it's going to test that high and potentially break it, and if it breaks it, it's multiples, and therefore can leg 2 to 3 bars more likely. So that means you probably just buy the breakout, right? You have to change your tune depending on how the market would behave. If it's going to behave this strong and not give anything back, yeah, there's a lot more risk, right? But at the same time, if you don't take that risk, you're not going to get into those stocks. And so, you know, depending on what the market hands you, you know, I've said before, there's really 2 types of trades, right? There's retraces and there's breakouts. That's really all there is. Everything else is some combination of them. When you play this and when you play that really depends on what the market gives you. If the market's really strong, right, you want to play the breakouts because they'll probably carry. Most of the time you want to play the retraces because most of the time the breakouts will fail. It's just not there. But you just got resets on some of these indexes and a lot of these sectors. I mean, by resets, what I'm talking about is on the short-term time frame, you had a reset of trend, a reset of trend, a reset of trend here. So in other words, we're only, what, 2, 4, 6 bars into this. And when it crosses this swing point high, it will reset again. And what does it mean to reset? Well, the mean time to failure of that trend starts at 0 again. And that means it can leg for a while. And so the fact that a lot of these reset, it would have been better for a longer term move had we reset on the weeklies, but we didn't. So really, it's the short term move, but they're all reset now, and they can all leg higher as a result of it. Yeah, they're stretched on the longer terms, but if this thing takes off, you know, it's a self-fulfilling thing. It will just go. And so you have to decide where the market is and what the opportunity is and determine, do you take those breakout trades or not. So hopefully that's a good explanation. All right, I'm getting to the end of the time here. It is Thursday. That means I don't do another show until Sunday. You got a day of trading tomorrow. There's really not much going on economically. You got a little Fed speak I saw on the calendar. They're going to test the highs. It's the end of the week. It's options expiration as well, right? So anything can happen. Usually, you know, depending on where things are, options expiration kind of dictates what's going to happen. If I look at those expirations, my good friend Jason Levitt puts out some numbers on those. He talks about that the SPX actually needed to trade down a little bit and everything else just kind of hold. Well, that didn't happen. Everything traded up. So the arbitrageurs are going to have some pressure to hold this thing back tomorrow. They're going to pay out a bunch of money on the call side. And so they don't want to do that, and so there will be some pressure to try to hold this back tomorrow. We'll see if they can, because right now this market's strong and it just simply wants to test. Given the push, given what I just said about the options, I would think we at least test tomorrow. Whether we get over it or not and stay over it, I don't know. I kind of think we won't. I think we'll kind of hang here. But folks, they're winding this thing up to break it out. That's just the way it's trading. So, you know, the dominant trend is still up. Has been, still is. You know, if I pull it back as a reminder here, the weekly is strong, hasn't given anything up yet. The monthly still strong, hasn't done a thing on the monthly. I mean, these look like little blips. So you got to trade with the dominant trend, especially when the storm clouds start to turn and move away from you. You got to start putting your exposure on or figure out a way to get it on. And if this thing trades up in this area and doesn't give anything more back, it's going to be a powerful breakout when it goes. Hey, have a great night, folks. Thanks for joining me again. I will call it a night and appreciate you being there. Tell a friend, tell two. I'm LA. This is and was your daily TA wrap. Have a great night. Take care of yourself, and I'll see you next time. Good night, folks.